Joe Corio. I'm Senior Vice President of URL Financial Group, and I'm with my associate here today, Maria Adams, our Marketing Specialist for Annuity and Single Premium Life. On behalf of all of us here at URL, we thank you for taking a few minutes to be with us today. We have a very informative presentation for you today. We're only going to be about 25 to 30 minutes, and if you'd like to ask some questions, just hit the question button on the toolbar that you see on your screen, and we'll be glad to answer those questions. And at the end, we'll also be holding a poll that if you want more information, you just click yes, and we'll get that to you. But I'd just like to thank everybody for being here, and first and foremost, for you agents that are on the line that have submitted business to URL either in 2013 or prior. We definitely appreciate all your business, whether it's life, Medicare supplement, MedSup, DI, individual health, or group health. We definitely appreciate your business and your support. For those of you new agents on the line, we welcome you today. Our job is to make sure you succeed in the sales process of annuity and single premium life, and we'll do our best to make sure that you grow your business in 2014, because without you, we're not going to be around very long. So we take that very seriously. We know you have a lot of choices in the IMO or the marketing company you work with, and we'll do our best to earn your business. So briefly, if we can get started here. The annuity business is booming right now, as you might know. 2013 was a great year, which followed 2012, which was an awesome year as well. It's good to see that people are finally seeing the benefit of indexed annuities with no downside risk and safety in their investment. Today we're going to talk about another product, however. I love annuities, but the truth is some people have needs that can be better served with single premium life. So that's what we're going to focus on today. Single premium life has changed dramatically for the better over the last few years. As folks are learning about the new products, sales have started to soar. Matter of fact, the last quarter of 2013 was URL's best quarter for single premium life. And the biggest change in the products is that single premium life now offers living benefits that clients can use for themselves. So let's just quickly take a look at why single premium life is so popular right now. Bear with me a minute. Here we go. Well, the first thing that makes single premium life so popular is the low rates on CDs and savings accounts. Estimates vary, but the last I heard was there's about $5.9 trillion in bank CDs, money markets, and passbook savings accounts. A lot of that money is just waiting to be transferred to the next generation. What better way than life insurance to do that? Life insurance has always been and still is the most efficient way to transfer money from generation to generation. And with today's ridiculously low rates that the banks are offering, it makes more sense than ever to move the money out of the banks and into a single premium life. How about the high cost of long-term care? Over the years, thousands of old long-term care plans have been written and are now being adjusted for premium due to inaccurate premium assumptions. In addition, the high cost of long-term care, along with the restrictive underwriting of those plans, is leading to more and more single premium life sales. Last but not least, long-term care has the old use it or lose it philosophy that single premium life with living benefits does not have. If the living benefits are not used, the policy still has many valuable features that make it attractive to clients. Another reason single premium life is so popular is the old cash value life plans that are out there. They might be whole life or they might be universal life. A lot of them have a lot of cash and a little death benefit. It's not uncommon for us to get a call about an old life plan with a $50,000 death benefit and about $30,000 or $35,000 of cash value. maybe the clients don't really want that coverage anymore, and rather than dumping it and cashing it in, we suggest they move it over to a single premium life plan. They'll eliminate the premium payments, they'll still have coverage in the event of death, and they'll provide themselves with some living benefits. Finally, one last thing that's making single premium life so popular right now, taxes. Nobody wants to pay more taxes than they need to. We can use a single premium life plan to transfer taxable money into non-taxable life insurance. Now, we're not talking here about avoiding taxes at all. We're talking about minimizing taxes, and we'll talk about this a little bit further in the presentation and actually give you some examples to look at. Okay, now you have a feel for why people are so receptive to single premium life. Let's talk for a few minutes about the products themselves. Now, I want to point out we have a variety of products from a variety of carriers that offer single premium life, and they're each unique with their own provisions and their own underwriting requirements. We represent Equitrust Life, Baltimore Life, Lincoln National, Americo, Genworth, National Western Life, all the top name carriers in the single premium market. We have them. Almost all of these companies offer products that have the same basic key selling points, single premium life. Single premium life provides an immediate death benefit that's greater than the premium paid, and it's generally free from income taxes. They also offer tax-deferred growth. Plans are either whole life with set rates declared annually by the carrier, or universal life plans, with the most popular UL being indexed UL, which allows for greater potential of cash value growth that is tied to the performance of an outside index. Most commonly used is the S&P 500. With these kinds of plans, as the cash value grows, so does the death benefit. And the death benefit, again, is usually tax-free to a named beneficiary. Now, here's a big selling point on the single premium life. One of the biggest driving forces in the sales of single premium life is the feature that allows the client to have access to the current death benefit for unforeseen emergencies, such as chronic illness, which is home health care, terminal illness, or nursing home confinement. Now, let's take a quick look at the two products offered by one of our top carriers, Equitrust. Now, Equitrust is, like I said earlier, is not the only carrier we represent, but we're using their products today because they're very simple to understand. The underwriting's competitive, and the product and comp is competitive as well. Now, Equitrust offers both a whole life plan called the Wealth Sure and an indexed UL plan called the Wealth Max Bonus. First, let's take a quick look at the Wealth Sure. Wealth Sure is a whole life plan, and it provides a guaranteed death benefit greater than the premium. The guaranteed values are based on 3% interest, which is pretty good in today's environment. On a non-guaranteed side, the current rate for the whole life plan is 4.9%. And it does offer living benefits for home health care, long-term care, and terminal illness. So if the client has an emergency they need, they can use the current death benefit to pay for those three things. And for cash emergencies, there's a free withdrawal provision, kind of like the withdrawal provision you'll find in annuities, where anytime after the first year, the client can take 5% of the current accumulation value without any penalty used for emergency. And that feature can be used over and over and over again every year, anytime after the first policy year. So let's take a look at some of the guaranteed benefits for this example, a 62-year-old female. If she places $50,000 into the Wealth Sure plan, it produces an instant guaranteed death benefit of $95,500. That's almost double the premium. And the face amount is guaranteed for the life of the plan. So, for instance, if this money came from a CD, we just turned her CD with less than 1% interest into $95,500 guaranteed. Now, as you can see here on the screen, the non-guaranteed death benefit is $100,622, which is more than double the premium. Again, that is based on the 4.9% interest. Now, don't you think your clients would feel that this is a much better way to leave more benefits to their beneficiaries than, say, a CD or a money market? In addition, the death benefit here can be used for living benefits as well. As you see on the screen, based on the guaranteed death benefit, the plan provides for $95,250 of nursing care or chronic illness benefit and slightly less for terminal illness. In other words, all the death benefit is available except for $250. Now please note, what we're showing you here is the benefits that are available for nursing home care, chronic illness, and terminal illness based on the guaranteed death benefit. We do that because the companies appreciate when we use guaranteed numbers. But in fact, what you really use is the current death benefit. So if this client needed care, they would use the $100,622, take out a $250 one-time fee, and the balance of that would be available for living benefits. Let's take a quick look at the tabular values for this plan, which show guarantee and non-guarantee values. As you can see in the guarantee column, the minimum death benefit starts at $100,000, and then it assumes there are some charges in the policy, so it'll slowly go down to where the guaranteed death benefit is $95,500. On the far right, you can see the non-guaranteed values. The benefit of $100,622, non-guaranteed death benefit right away. As you go through the years, the death benefit continues to grow and grow. And if, for instance, in 15 years the client needed benefits for living, and this held true at 4.9%, in essence, they could take the $111,682 death benefit you see in the 15th year at age 77, subtract out a $250 policy fee, and that would leave $111,432 for living benefits. A pretty good plan. A more popular single premium product, however, is the Wealth Max Bonus plan. The Wealth Max Bonus is an indexed UL that offers 3 indexing options and a fixed account. The potential for cash value and death benefit growth may be better than whole life, similar to the potential an index annuity possesses over a traditional fixed rate annuity. But of course, past history does not guarantee future performance. Let's take a quick look at that product here. I'll get my computer to cooperate. There we go. The Wealth Max Bonus. A quick look at this product shows it's just like the whole life plan. It offers a guaranteed death benefit greater than the premium, guaranteed values and non-guaranteed values, and we'll cover all the specs and the caps on this plan in just a few minutes. Since it is an indexed annuity, it does have some rates and caps that we need to discuss. We'll get to that in a couple of minutes. But what really makes this particular product so popular is the 12% bonus that the company offers. You see it there in the fourth bullet down, 12% instant premium bonus. So if the client puts $100,000 in, the company adds $12,000 instantly. And the product has a full return of premium option for the client. Anytime that they care to, they can ask the company to refund their money, and there'll be no questions asked. They will do that. Or they can surrender the policy for the surrender value if it's more than the premium. And in most cases, if they keep the policy a year or more, it probably will be greater. Now, if they do that in the first 2 years, however, there is a chargeback of the commission to the agent. There is no charge upon the death of the insured, but if they surrender it, there is a chargeback in the first 2 years. But actually, those are some great selling features that really get the client's attention. Again, the Wealth Max Bonus may offer living benefits, and does offer living benefits, and the 5% free withdrawal also is on this plan as it is on the whole life plan. So using the same example that we used on the whole life, let's look at the Wealth Max Bonus Indexed UL. Look at this example. Female 62 putting $50,000 in would have a guaranteed death benefit of $98,000 in this case, and a non-guaranteed death benefit of $132,153. Now that is quite a nice benefit. That's due to indexing and, of course, a 12% bonus. All of the death benefit, with the exception of $250, can be used for home health care or nursing home care. In most of the states, that's available right away. For instance, in Pennsylvania, it's available without a waiting period. Some states do have a 30 or a 60-day waiting period before you could use it for home health care or nursing home care. Looking at the tabular detail, you can see the guaranteed and non-guaranteed values. You can see how they start to increase on the non-guaranteed side right away as indexing values are added each year. And these numbers are generated based on a 25-year history of the S&P. That's what the company uses to do their illustration. And again, the 5% free withdrawal can be available from the cash accumulation value. And you'll note the surrender values. There's, on the guaranteed side, there's never less than the premium put in there, but in more real numbers, even after the first year, the surrender value is greater than the premium because they get to keep that bonus if they do surrender. So it's a pretty popular plan. It has a lot of bells and whistles, makes it really easy to sell. So hopefully you'll have a feel of how the products work for you and how they can benefit your clients. Now my associate, Maria Adams, will give you a quick overview of the specs of the policies and tell you how easy it is to apply for and get them underwritten. And then I'll be back to take a few minutes to discuss who the prospects for this type of plan really are. And I think there'll be a few that you probably haven't thought of that'll be on that list. But right now, here's Maria Adams.
Hello, everyone. I just want to go over the product specs on the two products that Joe has been discussing with you. As you can see here, the issue ages for the Wealth Max bonus is 50 to 85. Again, that's the indexed UL with the 12% premium bonus and the full return of premium. Then the Wealth Shore, which is the whole life product, though that is aged 55 to 85. The minimum issue premium for both products is $10,000, and the maximum issue is $750,000 for the face amount. Again, both products have the free withdrawal up to 5% of the accumulation value each year starting year 2. You can see the interest rates and caps here. For the Wealth Shore, the current interest rate is 4.9%. The Wealth Max bonus is 4.2. The point-to-point is 8.5. The 1-year monthly cap is 4%. And the 2-year average, there's no cap. These are great interest rates and caps right now. These caps are higher than the annuities, and that's because of the mortality charges that are in the policy. The companies don't have to rely on making a profit on the spread like the annuities do. On the right-hand side here, you can see what the minimum interest rates are, so they can never go below these minimum rates. And the great thing about this product, these interest rates have not changed in the last 3 years. So something to think about there. Also, these products, they do provide some great commissions. Depending on the product and the company, some of them even pay up to double digits. But also in regards to these products, as you can see on the issue ages, 50 is the minimum. We do also have companies that we do represent that have those clients that are interested if they're in their 30s and 40s. So besides Equitrust, we would have some other carriers that we could help you with if need be. On the next slide, I just wanted to go over some statistics with you. Okay, as you can see on the product itself, the Wealth Max bonus is the most popular of the two, and that is because of the 12% premium bonus and the full return of premium. So 77% of sales are coming from that Wealth Max bonus. The average size premium is $81,500, and that's actually higher than most annuity sales right now. The gender is females, 63%, and that mostly is because you know, women nowadays, they just don't want to be a burden to their children or their loved ones. So women hearing this product, you're getting more sales out of them than the males actually. The source of funds are actually coming from the banks. As you can see there, 74% is coming from cash with app, savings accounts, and CDs. And then you can see there, then it's the annuities and the life sales. The average applicant age is 72, and then you can see the breakdown on the other age brackets. Now, how to get started with these products. After you get yourself appointed, you would need to complete an application and a disclosure. And after you do that with your client, while you're with them, you initiate the telephone interview between the carrier and your client. And we stress that you do that while you're with your client. I mean, once you complete that application, you're there with them, those medical questions are fresh in their mind, they have any kind of medications they're taking. So we do strongly suggest that you do that while you're with them. And the average time on these interviews are probably 15 to 20 minutes. Then once you complete the application, you can either mail or fax it to the home office. And after that phone interview is completed and that application is faxed to them, a decision is made within 48 hours in most cases. If the company feels that they would need additional information and they would have to go for an APS, then they would do that. But the great thing with this product is there's no pyramids, no blood, and no urine. And most of the companies that we represent for these single premium lives do not recommend pyramids. So that is something, you know, really to think about also. If you do have a client that is questionable on some health issues, you could email Joe or myself the specifics on your client, what kind of health issues, and then we could forward it to the underwriter for a tentative offer, and then they would let us know if the client would be insurable or not. But I have to admit, Equitrust is very liberal with their underwriting. They're great to deal with. The average age on these people, you know, they're in their 70s. They understand that those clients are going to have some health issues, high blood pressure, cholesterol, diabetes, as long as they're not on insulin. We've seen cases like that get issued within 48 hours. So it's a good product, especially on those clients that, you know, just have money sitting in CDs, have money just sitting there in old existing life insurance policies that are doing nothing for them. So just something to think about. Now Joe is going to talk to you about those clients, prospects that, you know, would benefit out of this plan.
Okay, thank you, Maria. Yeah, by the way, at the end we'll answer these questions. I got about 4 or 5 questions, some of them very good, and we'll answer those as well. Let's talk a little bit about the prospecting for single premium life. We already mentioned in the beginning of the presentation, there's trillions of dollars in banks that are sitting there, a large portion that is earning less than 1%. Most of it's earning less than 0.5% actually, and it's waiting to be transferred to beneficiaries upon the bank holder's death. These are great prospects for single premium life. Think about it. Wouldn't your clients want to immediately increase the beneficiary's inheritance by 30, 40, maybe 50% or more into a tax-free death benefit and still have full use of the money for themselves if the need arises? With the return of premium in there, it gives them full access to their money immediately. The bonus is a beautiful piece of the puzzle that helps, and of course the living benefits. So in a lot of instances it becomes a no-brainer. There's no risk to the client, really. Secondly, we also mentioned the high cost of long-term care. Many folks not only don't like the high cost of long-term care, they don't like the use it or lose it benefit. I've heard that so many times, people saying, wow, $7,000 a year for long-term care, that's a lot to be paying for the next 15 or 20 years. Suppose I die of a heart attack and never need it. That's money down the drain. So you won't have that problem with single premium life. If they don't use the living benefits, it'll go to a named beneficiary upon their death. So these people are perfect for single premium life. The other thing out there, you got to remember that long-term care, maybe some people didn't qualify for long-term care because of underwriting. Well, in a lot of these cases here, these policies are life policies, so they underwrite for mortality. So although they maybe got declined for long-term care, they still might be possible candidates for single premium life. We've had many people who were declined for long-term care and got the single premium life approved without a medical in about 48 hours. Now, that's not to say they're never going to get an APS, but that instance is about 7 or 8% of the people who they ask for APSs. How about life clients who have old ULs or whole life policies? They're perfect for single premium life. A lot of them have ULs that were sold when interest rates were very high and they're ready to implode, and they've never added premium to them. And if you're in the life business and you get copies of the client's annual statements and you get a UL and it looks like in the last 2-3 years they haven't added any money into it, what happens to that cash value? It soon hits a peak and then it starts to go down on the downside. Well, those are perfect people to talk to about, look, you can say something like, I notice you're not funding your life plan. Is there a reason? And they're probably going to say, well, I don't need the coverage. I'm just going to let it run out. Well, a better way would be to take the cash value that's in there while it's at its peak, move it over, tax-free transfer, 1035 exchange, into a single premium life policy. It stops the premium payments. It gives them a death benefit. It might not be exactly as good as it was originally, but it's going to stay level, and it gives them the living benefits that they need. And they could borrow from it if an emergency comes around. So those existing life and UL clients are very good. Finally, prospects for this are annuity clients. I think Maria showed you a stat where about 17% of the money that's funding these plans are actually coming from annuity plans. And I know some of you might be saying, what? You can't go annuity to life. And that's right, you can't. But there are many annuity client holders out there that have no plans to use their annuity funds. They might have it earmarked just for beneficiaries. They're going to die with it, and upon their death, it's going to go to the beneficiaries. They might have even IRAs where they don't want to take the RMDs out of it. These may be good candidates for single premium life. And I'm going to just give you a quick example here of how it works. Even though it's a taxable situation, and you always have to remind people, you know, if they have questions, they should talk to their tax advisor about it. But this is basically how it's going to work. Let's take a female 65 who put $100,000 into an annuity, maybe a couple of years ago. It might be one use older. And now it's worth $130,000. Well, that's a $30,000 gain, so this non-qualified annuity would have, if she surrendered it, she'd pay a tax on the gain, $30,000. If she was in the 30% tax bracket, that would be a $9,000 hit. Well, if she took her $130,000 and took $9,000 out of it to pay taxes, that still leaves her with $121,000. And if a female 65 put that $121,000 into a Wealth Max bonus, it would provide about $220,000 of death benefit instantly. And that's tied to indexes with the higher caps, so it's just going to continue to grow and grow, and it's going to grow without tax implications, because if she dies with it and it goes to a named beneficiary, they'll get the entire death benefit tax-free, or she can use it for living benefits. So as you can see, where we used to run away from annuity options into a life, these type of policies, especially with the bonus that this one offers, gives us another reason to talk to people with life policies. So that's some of the people who are taking single premium lives. Now, I do have some questions here, and once we're done with the questions, we're going to get a poll question on the board, and the poll question is going to be very simple. If you want more information, or you want to learn more about the product, or you want us to call you to discuss it, click yes. Okay? If you're not interested, if you're only on the call for information purposes only, and you don't want us bugging you, click no. It's going to be very easy. We want to work with the people who want to know more about the product, want to present it, want to have it. And I'll tell you, ladies and gentlemen, if you're not presenting this or talking to your clients about it, someone else will. I had an agent in my office yesterday, had an 84-year-old woman who had $50,000 in the bank. The bank called her and told her that her interest rate was very low. They had another option for her. Could she come in? She went in, and they presented a single premium life proposal. That was the bank. So if you're not, and she loved the idea, by the way. Luckily, she was related to the agent, so he was able to save it and make the sale himself. But my point is, if you're not talking about this type of product, somebody else will, because the living benefits are very important to people. They like the idea of having them, but they don't want to spend money out of their own pocket to get them. So it's either you or someone else who's going to be talking to your clients about these. Okay, let me get to the questions. I thought there must be a death benefit residual after all living benefits are used to keep it a life policy and tax-free. That used to be the case, but a few years ago, I'm going to say 4 years ago, the laws changed a little, and that's why you're seeing more and more single premium life cases. And basically what the laws now say is if you take a current death benefit and pay it out systematically for a health care of any type, it is not a taxable event, and you do not have to have a residual benefit. So that's a great question, but the laws have now made it so that these policies are much more effective. Sorry for the silly question. What is the point-to-point? The point-to-point is an indexing method of measuring the gain. So if you're not that familiar with it, we'll be glad to work with you. But what it does, your gain, if you choose the annual point-to-point with the 8.5% cap, is measured from your policy date beginning to the end. So let's just assume your policy was effective today, January 22nd. They would look at the S&P at this evening, and that would be your starting point. At the end of the year, they take the S&P 1 year from now, January 21st, 2015, and they would measure the gain, if any, on that policy. Let's say the S&P did 10% at that time. Well, then you would be capped at 8.5%, so your return on that plan would be 8.5%. So the company would credit your cash value with 8.5%. So that's what the annual point-to-point is. Somebody wants us to call you, which we will, Mark. Somebody wants the PDF, which we will, Christian. Female 87, do we have anything? Great question. Unfortunately, we do not. All the plans and all the carriers we have, the longest they issue plans is 85 years old. Sorry, we can't help you there. We do have some annuities that have, that are attractive between 85 to 90, but we do not have any single premium life plans. Let me see if there's any more questions. Please call on. Got that one already. Do you have any lead programs available? Good question, Linda. We do not have lead programs for this. I have searched some of the mailing companies, and they don't really have something for the single premium with living benefits. However, that being said, I've been in this business over 30 years, and I have found I've tried every lead system available for annuities, from TV to radio to all, you name it. And what I found works best is helping agents go back to their existing client base and find business. And I'll be glad to do that. We have letters that we have that are available to you that you can send to old clients, especially with this product. You can go back to old annuity clients. You can go back to old life clients. So there are a lot of ways to, rather than reinvent the wheel, just to go back to people that you might have worked with over the years. If they're not of that age yet, maybe you work for all younger people, somebody's got a parent somewhere, an aunt, uncle, grandmother, grandfather. So there are ways we can help you with that. But to give you a lead system, I don't have one because all the ones we've tried do not work, and I wouldn't give you something that I didn't think was worth your money. And believe me, like I said, I've tried them all, and every year we set aside some marketing dollars to experiment with lead companies and haven't found a good one yet. Let me see if I have any new questions in here. I don't believe so. So I would just like to remind you there's a poll question coming up. If you'd like more information or you would like us to contact you in regards to this, please click yes. If you don't do that, that's fine. We'll work with you whenever. We'll always take your business, but keep us in mind. And when you do come across a case, please give us a call. We'll get you a specific proposal or printout that you can use with your client. We'll walk you through the process. And if you haven't sold annuities or single premium life, but you want to get into it, that's what we're all about. We'll hold your hand. We'll walk you through the process. We'll make sure you're comfortable and have all the tools that you need to make a presentation to your clients. I'd like to thank everybody on the call today. I appreciate you taking 30 or 40 minutes of your time to be with us. I'd like to thank everybody again for your business. And please, I hope you have a great, safe, and prosperous New Year. Thank you very much for stopping by today.